Hey guys, welcome back. I'm going to go over my one and only trade today. I took my trade on HTOO. So my trade on HTOO, before I go in, if you guys don't know me, my name is Maurice. I'm a beginner day trader. I'm using a cash account only right now. Trying to work my way up to a PDT account, $25,000. Hopefully we'll see that change real soon. But I want to give you guys an insight how it is as a beginner day trader using the cash account. It's tough. It's not easy. It's not hard. Like today, I'll go over my frustration. You know, and why sometimes it can be hard to stop out. So HTOO came up on the scanner, 500,000 share float. Now, what was the news on this stock? Well, let's see. It was about 7:30 in the morning. They got an engineering contract. So I'll show you guys right here, my other screen. This is what I'm seeing. First headline right here, 7:30 sharp. Okay. So we don't really like pop up on that news immediately. I did have it on my scanner, or I did have it up to see if there would be a move because I saw the float was really good. Let's take a look at the daily. So daily's chart is something I also like to look at as well. What am I looking at the daily? Well, I'm trying to see if there's any room for a gap up, if this has been selling off, and any recent reverse split. So we did have a reverse split right over here, July of this year, and it has kept selling slowly. I do remember trading this early in the summer. It did go up. You see it closed at $4. It actually closed at 428. The next morning opened up at 9. I think this was one I've day traded in the past, but it came up again. And a lot of these stocks that were trading, the small momentum stocks, small cap stocks, you most of the time they'll be coming back again and again. So I felt pretty confident about this. I didn't really see any gap up, but the fact that there was news, I was like, okay, well, we opened up. Let's see, what price did we open at as well? And it refreshed. Well, it's kind of annoying. Don't know why it does that. Again, let me know if you guys know why it automatically refreshes. Not sure. Anyways, I think when I saw it, it was around 378. So I'm looking at my daily. I'm like, okay, we are 378, 348. We're above this, 362. We're above this doji. So I put my next line right around here to see as an area of, wait, no, not over here. Sorry, right over here, 388. I'm like, okay, we're opening just under this doji candle. It is under this top, not doji candle, underneath this top right here from November 17th. And I'm like, okay, I'm assuming we'll probably get resistance up to $4. If we're around 470-ish, we're already at the quarter half dollar, so 25 cents away from, the whole dollar. I'm like, okay, maybe we might see resistance at the quarter half dollar at 425 as possible resistance, and then from there maybe 450, because there's not really much room. I didn't feel like this would be a huge um, gainer, but I think that it could have been potential to go up to 450, $5 maybe, but it's had some trading history. There was no gap up. I feel like the gaps help a lot. Just gives more confidence. So we'll go over to the 10-second chart. I'm already looking at the 1 minute. I'm looking at it both multi-time, multi-alignment. So this comes up on the scanner. It forms a doji candle, flushes down. I'm waiting to attempt for this break over here. What I'm waiting for is to see where it will first make its new high of that same morning with the news. So it dipped. I don't take a trade. I want to wait to see if this will curl up. So I'm going to go back to my other screen right here, and I'm going to show you guys my entries. My entry is right over here. So let's go to activity positions. I'll show you guys how much I lost. I lost about $29 today. 29. Yep. We're at $29. So we're $39 in the red. So I stopped early. I was like, I don't want to continue. I felt already upset because my first trade was good, as you can see here, but my second trade, I think it was a good decision, but I just got annoyed, and I'll explain later. So I took my first entry here at 728. So in this candle right here, I'm like, okay, we're gonna break over this new high of day. It's gonna happen quick. 10-second chart's pretty quick. 439 is my first entry. So this is actually not a bad entry. And now looking at this, I'm like, maybe I sold a little bit too soon, but I did hit my target goal. I got it at 439 and sold at 461, so it's about $22 ish. I did my math right. Yeah, around $22. Second guessing myself. $22. Sorry. It's just it's basic math. Sometimes you just gotta like, is that right? Anyways, 439 entry, 461 exit. Okay, good. I profited. And I was like, okay, let me take that off the table. I don't want to get greedy. You know, this might not have been a strong move. So I don't know that this will be a good move. I'm making the best assumptions and the best guess, making my best decision. So this is what I see. I'm seeing this candle. I take a trade, and then I get out basically 10 seconds later. um, right in this candle. Sorry, let me take that back. I don't get in this candle. I actually get in here because I want to anticipate this breakout. Low float goes up. 2 candles later on the 10-second chart is when I sell 461. Sorry about that. Then I'm like, okay, maybe I can take another entry. This is sort of a consolidation. Is this good? Yeah, there we go. That's what I wanted. This is sort of a consolidation. But this candle right here, this relative volume, I was like, I don't know. This is a lot bigger than these 2 candles right here, and this is a 10-second chart, I know. But we are above the 10 EMA. It didn't pull back pretty intensely, so I was like, okay, this might be good. We'll see what comes up. So I'm looking at this candle, squeezes up. I'm like, oh, I'm gonna take this trade up to $5, a break of 5. That's what I was looking for. And we squeezed up pretty high, higher than what I was already looking at in the morning. So I was like, wow, this is blew my expectation. I'm taking entry here, or right here, 494. Briefly touch over 5, instant rejection, and I I don't know where my eyes were looking. I don't know if I was in the chart. It's so easy to get caught up, but I need to stay focused on the level 2. And this is why I'm not very fond of Charles Schwab, because I think you're just looking at the screen here and over there can kind of get you a bit distracted. I noticed with like the light speed, you have the level 2 in front of you and you can put it by the chart. So I think it's easy for you to see. I don't know. Let me know what you guys do. Let me know how you guys enter. I don't know. I just find it kind of distracting because you want to look at one screen, but then the other screen, I don't know. You don't have ADHD? I don't think so. But anyways, I don't know where my eyes were looking. I see this come up, red candle, and I'm holding this stock, this position for about like 50 seconds. Why? Why did I hold for 50 seconds? If I get in here, I got a 4-1-11. So at the top of this candle, at the top, not the top of this candle, 494, and I should have stopped out right here. The next candle, as soon as it was down 10 cents. But that's the thing with the cash account, it's hard because you're more likely to hold because you know it's your only chance. You know that if you fuck up on one trade, you don't mean to take a trade that you accidentally took. That can take away from the psychology of just being disciplined, and that can hurt. And that's why it's a bit frustrating sometimes. But I think this has to be how I get better. I have to fail to get better, and I have to be okay with that. But it's easier said than done. You guys know that the psychology of trading is hard. I'm holding all the way. And as soon as it breaks VWAP, that's when I sell. I'm like, okay, this is it. Why did I wait until VWAP? Well, this could have been, a small pullback. It was on the 10-second chart. It was declining. So let's look at that 1 minute. Let's see what we're seeing here. I was using the VWAP as support, and it just failed too quickly. So really, my trade was right here. So this is not a good candle. Let's full screen this. That's not a good candle. This is bad. This is bad wick. So looking at this is like, should get out. And it did make a rebound up to this high, but not to this high. So I don't know. I don't know if you guys would have taken this trade. To me, how I look at it, let me draw. I want to take advantage of this entire setup, this entire MACD crossover as a crossover. I'm noticing when I lose, I'm taking most of my trades once it starts to cross over down to the downside. And I think I did that, I think a couple days ago, and I was like, don't trade that, don't trade that, you're going to lose. Because it was already at the end of this MACD crossover in the 1 minute, and I was like, don't trade it, don't trade it. I think I did trade it. I don't recall, but I remember telling myself, don't trade it. I don't think I paid attention. So that's what I was going on the 1 minute. So we're down that much. And honestly, I was thinking, why was I doing better in the summer? What happened in the summer? Well, I'm going to say this, but I think when you have a lot of things going on, obviously I have school, you tend to kind of get stressed, I guess, or unrealized stress, or it just is, I guess subconsciously it maybe messes you up your performance, like with sleep. If you're not getting proper sleep, if you're not getting proper nutrition, if you're not getting like when you're exercising for sport, if you're not doing all the proper things, it could subconsciously affect your performance, and you might start to question, why am I failing, why am I sucking? So in the summer I didn't have school, I was just working, focusing on trading. I'm doing all three at once, and in the beginning of the year, from January all the way to March, I was struggling until I got hang of it April. And I think it's just because also in April, I started giving up in school. I'm still doing good. I realized that I didn't need to try so hard in order to get a good grade. Like I can get an A, no problem, because I've already been through this game. So I feel like just everything starting over again with the classes, class schedule, I think it can get overwhelming, and that's something that maybe is messing up my trading. Just unnecessary stress. I don't know. I'm making that sort of correlation because summer I did really good. And now that I got back into school, end of August, September, October, November, I'm finishing school next week, my last week. Then I'm just gonna graduate next semester, just one class. So I don't think I'll be as stressed, but I don't know. I'm seeing a correlation. If my trades start to get better end of this month, then I'm gonna that's confirmation that hey, doing too much might mess up some other things. And yeah, this semester was a bit stressful, a whole other issue. But yeah, that's just my spiel on what I think. Maybe my trading hasn't been the same. Um, I think I'm taking more reasonable trades, taking it with like proper execution, like I did on this 10-second chart, waiting for the pullback. I think before when I was trading, I would be very risky and not realizing the other things like looking level two, paying attention to that. You know, getting in early on the move, anticipating his breakout, recognizing patterns, using the 1 minute more often, using the 9 and 10 EMA as potential support. And yeah, I mean, this climbed up. Here, we'll go back to this. This climbed up over the 10 9 EMA. And that to me is pretty strong when it starts to cross over and diverge. But when it starts to diverge down, then that's when it's not really that good. This is a quick trade right here. You see, get in 450, potential psychological support, goes up to 76. That's a good 20 cents. See, and that's why I can't wait for the PDC rule to change. I don't know how Charles Schwab will do this. I hope they don't add like a bunch of fees because that would suck. But it's just these things where it's like you can scalp these small trades. Just one trade here, $20. You know, another pullback here, maybe 10, $15, and I think this will bring a lot of liquidity to the market. So yeah, I'm looking forward to that. I don't think a lot of people are very pessimistic about this bull like the way this market is going. You know, I really think if we're just getting started, especially if the PD2 rule is going to be changing. I don't think people know that that's going to be coming around the corner. We are going to see more traders like myself coming into the play with more liquidity because we're going to be able to trade more and it's going to be way more volume. So I think we're just getting started. This is SPY chart. People were anticipating that this would, we'd have a flush. We actually, I thought we were going to flush down too, but this was a candle of support and we're crossing over the MACD. I know technicals don't matter as much as fundamentals do on the SPY or overall markets, but it's still important to take notice in this trend, especially when you start to see this diverge. Look at this divergence when this happened. MACD was already crossing over. We were going down and we rebounded as we, you know, already anticipate that most of the time we will rebound, but people focus on these little things like myself. Like I noticed a small gap here, and look, we gapped here. This is why gaps are important. And in the overall market, I'm noticing that most of the time gaps fill. We gapped here, here, maybe not really here, but also slightly here, and then we were forced to go down to fill those gaps. So let me know why that is. If you guys know more about how the overall market works with these gaps, let me know why they fill. It's just it's a pattern that we all see. We all see this pattern on how why they fill, or not why they fill, but how they fill up. Not all the time they will. Let me go back to here. There you go. I gotta add that to my favorite. So I think an example where we didn't really fill the gap was early on this year when we were recovering. So as we were recovering, I believe here, yep. So June 24th, 23rd to 24th, we were gapping from all the way. We closed at 600 and then we opened basically at 604. We didn't fill that gap ever. So it doesn't hold true all the time that we will fill these gaps on overall markets, but most of the time, I would say 90%, 95% of the time we do. We gap down, we fill that gap up. We gap down, we fill that gap up. This is just constantly buying the dip. We gapped, let's see. We gap down, fill the gap up. Like dips are bought, and this was a huge gap. Like wow, that's crazy. And why am I paying attention more to this? Well, I don't know if you guys remember, this was back in August. I was trying to trade the SPX index funds using the options, 0DTE. I know options are very risky, but you can use them as a tool if you can manage your risk, just like day trading. It's the same thing as day trading. Manage your risk, get out early, take your profit, don't get greedy. Get greedy, get burned. This is worse. Those options, it's a lot more volatile, and the SPX index is overall on the SPY, overall market. And I'm just trying to understand how these patterns work, because there is a pattern, there is a game to this, there is a way to anticipate, but also understanding sentiment for the week. So I think this is on a larger scale of trading. I'm just applying the momentum trading towards the SPX index. I still don't know how I would be able to show that. I mean, I guess I can pull my Robinhood at some point and maybe go over how I would trade that. So I'm gonna say, I know it's a long video. Stay tuned if you're obviously interested. If not, that's fine. It's just my other option side. Uh, so you obviously want to trade when there's a lot of volume. This is a day to trade. Right here, November 20th. Why? Well, this could have been a day for puts. It was a red day. Well, we opened up, I think, pretty high at 672. High was 675, and then we closed at 652. So that's a pretty big swing. You made a lot of money that day. You definitely could have. I think this is a good day too. Um, Usually, the bigger the candles, and you're not going to notice at the end of the day, but usually the bigger the candles means more volume. More volume means more volatility. More volume means more swings. And with the SPX index, you can buy a contract for about maybe $100, $200. I think that's a little bit risky. I'm noticing that, okay, maybe buying contracts obviously closer to the money is going to profit a bit better. I think maybe 10, 20 points. They are a bit expensive. It ranges from like 500, no, usually like, yeah, 500 to $1,000 per contract. But man, that baby goes up 10 points above your contract. You're already in like sometimes 2x. And especially with these big swings, you can get in, you can make so much money on a single given day. And I think this is something I want to get good at on the side. One, because it will continue my trading, it'll fund my other, day trading. It'll give me money, more money in my pockets to pay my bills. And there's nothing wrong with that. I'm using this as a tool. Yeah, it's a form of gambling. Day trading is too. There's a risk to everything, but this is something I like to do. It's fun. I'm having fun trading these options. It can be kind of annoying. So what isn't a good day to trade? Well, obviously looking at the price action. So these 2 days, this day right here, yesterday was not a good day. So look at the volume. There wasn't that much volume. This might have seemed like a good day, but let's take a look at why it wasn't. So uh, I like to use the 15-minute chart for this. 5 minute, 1 minute. So look, we flushed down, and yeah, anyone could guess that. Oh, we flushed down pretty harshly. There was some news about Microsoft. So just looking at all these things, but you got to make a good prediction, obviously, on why this will recover. Dips are always bought. This is strong, but look, this took forever. This wasn't a day where we just went straight up to the moon, consolidated and went up higher. No, this took all day. So these are theta days. Theta decay means, if you guys are not familiar, theta decay means your options decay over the time. 0 DTE, the decay is faster. The longer the time, the less the decay. And yeah, so let's see what's a better day. So this right here, I think, yeah, 2 days ago. What day is it today? December 1st, I think was towards the end of the day, I think was better for puts. I mean, it's these swings too. Okay, I mean, I know yesterday wasn't a good day, but there's usually more volume on other days. Yeah, right here. I think this is better. And this is a span within like an hour too, but you do have to be on there. It's like I guess to really profit, holding it might require like 20, 30 minutes, maybe an hour. I've given up like some profits pretty early where I put in a contract for maybe 180 and it 2x's, and then I see that contracts are worth $1,000 and I'm like, damn, I just held for it longer, but that's the risk. So let's say here, say I'm trading the 15-minute chart. What I'm looking for is a break in either direction. This flushed down, but then this recovered, and using your same metrics with or same idea as the small cap momentum trading, looking at the MACD crossover, looking 15-minute because you want larger time limits, you want to see a larger time frame. I still haven't thought of. I'm trying to come up with a criteria. This is something I want to share with you guys. I know there's multiple ways to trade this, but I think with the 0 DTE SPX, I think it can be an easy, quick getting it out on the right days. By holding 30 minutes, 45 minutes. So you notice that this flushes down, bigger green volume. You notice this candle of reversal is running a downtrend. So you could say, hey, I'm going to take calls on SPX. you're holding 15, 30, 45 an hour. Boom. So from 677, 679, I don't know how much it is on the SPX scale, but that could profit you 2, 3x and you get out. You don't have to ride this entire move. I'm trying to see if there's a day. Oh, here. I think November 20th was the one I pointed out. And you can see my scribbles. This is a good day. Look, this is a good day. You notice that this trend is starting to break down. We're topping here, and it's important to recognize this pattern. The technicals matter, but so do the fundamentals. So I think going into the week, finding out, hey, what's the news headlines for today? What is causing sentiment for today? What are we expecting? And it's hard. I know this is not easy. I think this is a lot harder than small cap momentums because you are focused on the overall market. So a lot of things can throw it off. So obviously you see here that the MACD is going to cross over, and I would say if we break support, obviously you want to know the support that, hey, we had support here and we broke down. That would be a safe entry. Where I would take an entry for calls, I mean, this has to line up. We have to see obviously green volume. The green volume was decreasing, sold. So yeah, people start selling. This could be a spot to just take your position for puts. You can maybe use the 200 EMA as another level of support if we break for that. You can see how it does on the way down. But this took all day. I mean, to 10:30. I'm working 10:30. Tuesdays, yeah, sometimes Tuesdays and Thursdays I have some liberty, but this was let's see, when was November 20th? I'm gonna see right now. November 20th. This was Thursday, so this is something I could do because I can actively manage it. I'm at school. I can actively look at my computer and look. I'm like, okay, I can get in, get out. But obviously with Robinhood, same thing, PDT rule. So once that goes down, oh man, I think this will be a lot easier to handle and get a better grasp on. Because if I stop out, let's say I try to put for calls and it fails, this is my support, I get out of the calls and I go for puts and profit, make my money break even. And yeah, and this is, a span within like an hour and 30 minutes. I could wait for another candle of reversal. I mean, this would be a candle, I would say these two would be candles of reversal, but the volume is very thick here. So we would have to see the volume to decline a little bit to maybe get out. So that's just my spiel on the um, options 0 DTE, how I'm applying this, how I'm applying the momentum strategy to a larger scale, because this strategy works. I know Ross said that you can apply this to futures, crypto, but you just have to know how to exactly transfer it over, and this is how I'm trying to form it out. So let me know if this is something you guys are interested in. I know I rambled a lot, but please let me know if this was interesting. I want to share um, I've had some losses, but I want to share like the strategy because I feel like this is very adaptable and I see this as a tool. It's not just like, I want to make a fuck ton of money. No, I want to make money so I can live, you know? And this is the market. Market's a tool. You got to use it to your advantage. And we're living in such great times, and I think we're very fortunate enough to live in this time where we can do that. And if you're a young age, just my advice, just put money aside to the Roth IRA, have maybe an account where you can do short-term stuff, 2 to 5 years. Maybe have the options count, and if you're interested in day trading, have that day trading. Separate them all. Do not put everything all in one because you're gonna get emotional. Do not put everything in one. Separate your stuff. All right. Take care. Hopefully you guys enjoyed. Peace.